ease the liquidity situation. Reserve Bank yesterday announced a slew of measures to ease the liquidity, including rupees 8,000 crore bond buyback to ensure adequate credit flow to the productive sectors of the economy, which also supported the rupee. The rupee had entered 12 pice lower at 63.25 after hitting a fresh low of 64.13 against the US dollar in the previous session. Now, for more update on the Sensex situation, we're joined by correspondent Sidhant Simple. Sidhant, welcome to the show. Bad news, bad news all the time again. I mean, what do you have to say to that? We had a 10 pice gain in the rupee early morning. Again, it has fallen down. How are you assessing these trends?
Well, it seems that the bad news for the Indian economy is continuing to come out, and just 5 minutes before, the rupee has breached the historic mark of 64.40 against the dollar. Now, of course, it's trading at 64.32, but it has breached this for the second time. It has breached the 64 mark against the dollar. Reason basically, the positive reason, I'll start with why it gained in the morning. In the morning, it opened by 63.15. The reason chiefly was Reserve Bank's various announcement late last evening, the bond buying program. Many were expecting that the sentiment will continue, but the sentiment petted off. The chief reason why the rupee is falling right now is the fact that the Federal Reserve, which is the counterpart of the Reserve Bank of India, might just withdraw the stimulus package. Its July meeting minutes is going to come out by evening, and in this, the possibility is that the Federal Reserve might just clarify and say that it's withdrawing the stimulus from the American economy. Now, what will be the impact? The impact is the dollar going to flow back from emerging markets to America back, and this is making the currency weak. And this is just not that the Indian currency is weakening, it's a global phenomena, especially in emerging markets, whether it's Indonesia rupiah, or it's very Pakistani rupee, or it's Brazilian real. All the emerging markets, the currency is weakening, but it's more pronounced here in the Indian economy because the Indian rupee is amongst the weakest. It has already lost 16% against the dollar. There's also a domestic factor. The domestic factor is the huge current account deficit. It has already given a headache to the policymakers, and the chief reason is the huge amount of gold that the Indians are importing. And they're importing gold just because there's a personal desire also, and also to hedge against the inflation. Now, the government has taken a number of steps so that the import is somehow stalled, which includes increasing the duty on gold by 10% late last week. The announcement came out. The government has announced other reforms, such as increasing the FDI limits so that the dollars come in the country, the FIS come in the country. But it seems that the reforms, the various measures by the Reserve Bank, creates a positive sentiment only for a while, and then
of course it gets back. A very short question to you, we're running short of time. Is this a good time to convert our pounds into rupees?
Well, that's a very speculative question, but it's just not a good time. We can actually say that rupee is going to weak. Yesterday, it crossed the 100 pound barrier. That means one pound is equal to 100 rupees. That's a huge benchmark which the Indian rupee crossed. And today, a more ominous prediction by the Deutsche Bank. It said that the Indian rupee just might cross the 70 mark against the dollar by the end of this month, which is a huge. It's a very negative news. And also S&P also said it has the rating of the country. It has maintained the negative outlook. So in a sense, bad news, but the only hope is that we have to remain optimistic.
All right, Sidhant, thank you so much for bringing us